All right, welcome back to another episode of the Mortgage Show, joined by Chris Bedard. Beds, how are you?
Little thrown off. Your hat's not backwards.
I know, right? Sorry to switch it up on you before we started recording.
Is that something new?
Yeah, man, I figured I'd mix it up. Try to look professional. We're
I'm
not
doing
allowed to
good.
wear backwards at the golf club anymore, so trying to turn over a new leaf.
That's right. We can't. We're not supposed to wear them backwards.
No, man, we got to look professional on the golf course now, so no more backwards hats for Big Ran.
Man, you got to tuck your shirt in. Can't wear jeans anymore. I mean, what is this world coming to?
I'm not a big jeans guy, but there's a few people, you know.
Yeah, not a big jeans guy either. But I'm doing good, man. How are you?
I'm doing good, dude. Had fun recording our sports podcast, The Cheap Seats, yesterday. That is out right now. If
Yeah,
anyone is listening to this, had a fun little conversation about Rafael Devers, so that was cool.
that was fun, and I like some of the stuff that we're bringing in personally with our pickle. We're having fun with pickleball, guys. Pickleball is where
Yeah,
it's at this age. Pickleball, golf. Pickleball is pretty awesome, actually.
dude, it's awesome. Yeah, so check out the end of that podcast. We have a little fun, throw some shots out to some people. It's good stuff. But that's our life now. We're 40-year-old guys. Some late 40.
Old guys, man. Some of us are closer to 50.
Yeah, man, but things are good. So, got a whole bunch of mortgage stuff to talk about today. And if you want to follow my lead, I can just fire away some things. Tell me
Yeah,
what you think.
where do you want to start?
So we're recording this on Wednesday. It's around 1:30,
Yeah.
and the big news today, which will be out by the time this podcast comes out tomorrow, is that the Federal Reserve is meeting today at 2 o'clock, and they are going to determine what they are going to do with interest rates. What is the expectation, Bids?
Buddy, I don't know what they're doing right now. I know that the last couple of meetings they've sort of paused on the idea of lowering interest rates. You know, there's always this like looming thought that, inflation is could ramp its, rear its ugly head again. Though I'm kind of looking through some economic data as you were bringing that up. It's like even with today, it seems like the economic news has been stale lately. Have you noticed that? Housing starts were slightly down today. Initial jobless claims, that was sort of in the area of what they were expected. Yeah, I mean, look at this building permits. That was down a little bit. I would guess that today is we're not going to lower the Fed rate, but we're going to be looking at this in the near future. But we'll
Yeah,
see. Your
that's what
thoughts?
the expectation is.
Yeah.
Like if you read about it, the experts say that they're not expected to cut rates today. There's just not enough data to promote them doing that. But I think the thing that people are looking forward to hearing is just the commentary that comes out after these meetings where they maybe talk about what their expectations are through the end of the year. Right now, the market expects that the Federal Reserve will cut the Fed funds rate two more times before the end of the year. So if they come out and say, you know what, I don't know if we need to cut the rates two times this year, that will shoot mortgage rates up. If they say, you know what, it might be three times now this year, that would shoot them down. So that's the potential to move the market because, as we always reiterate, when the Federal Reserve meets and they change the federal funds rate, that's not mortgage rates. They're not setting mortgage rates in that moment. They're changing the federal funds rate, the rate that banks borrow money between each other, and all that stuff affects mortgage rates to some degree. But it's not like they set mortgage rates. So mortgage rates could react just based on what expectations they set for the rest of the year, and that'll be the part that's interesting to see.
For the mortgage rates, the longer term mortgage rates, bad news is good news for us. So whenever
Mm-hmm.
you hear me rambling about economic reports and if they met expectations, I'm always rooting for less than news because that's going to lower mortgage interest rates. So we're trending in that area consistently. It's
Yeah.
not bad news, but it's not the best case news.
As there's stuff going on in the world right now, Israel, Iran, Ukraine, Russia, all that stuff, the war stuff, that puts a little bit of pressure down on mortgage rates. So I think rates in general, 30-year fix, have been back into the upper sixes pretty regularly. I mean, there was times that it was back over seven a month ago or so. So we'll see if it keeps trickling down that way, but it has come down a little bit off those highs that we saw last month.
We are 23 minutes away from the Fed's decision.
Yeah. We'll see what happens if we're on still at that point. But okay, that's all I want to talk about with that. Any other reports coming up, wise?
We have Juneteenth tomorrow, so the bond market's closed. Friday, Philadelphia Fed manufacturing. So retail sales, jobs reports, those are huge. manufacturing is always like another big one because that's sort of an indication of what's going on with the consumer. You
Yeah.
know, are they spending number one? Do manufacturers need to keep up with that demand? So I've been seeing that number slip a little bit.
Okay. All right. Well, we'll see what happens with that. We'll keep everyone posted on mortgage rates. Next thing I want to talk about is trigger leads. Beds. How much do you love trigger leads?
Man, I hate myself when I forget to prep my customer that, look, we're doing a mortgage pull. You're probably going to get a call from 17 mortgage companies. It's not because of me. Here's what goes on in the market. I wish I would have that conversation more often. How good are you with that?
It's not part of my regular. I mean, I'm so systematized and the things that I say and the process and order that I follow for everything. Setting any type of expectation on this is not part of that. I don't know why. Because I could run 100 credit reports and maybe just have one person tell me that they got bombarded with phone calls after they ran their credit. And that's still, that one person isn't enough for me to like change my flow of things. It's not, it really is a low percentage of people that react to it in a way that it makes it back to me. But the people that react to it are very bothered by it. And it always reminds me that's like, damn, I got to tell people that they're probably going to get some phone calls. Because some people, they're just like, whatever. Obviously they're whatever because they don't reach out to me. So they just take these calls, don't answer their phone or whatever, and never think to complain to us. But again, when people do complain, they're pissed.
Are we close to that reversing?
There was some news. I think it was last week. Scott, our boss, sent out just there. There looks like there was a press statement from the Mortgage Bankers Association president that there's a bipartisan bill that is in the works to end trigger leads. And again, trigger leads, just so everyone knows, when we pull someone's credit, that information gets sold off, not by CMG. Just to be clear, like CMG does not have any interest in selling that information to someone just so you can get calls from other lenders. It's the credit bureaus that do that stuff, and so they call that a trigger lead. So if you ever have your credit pulled and then that day you get 400 calls from different random lenders, that's because your credit report being pulled triggered those leads to go to these other companies online. So they're trying to end that, which obviously we would love because it creates distrust between our borrowers and ourselves. It's annoying, and just kind of muddies the water. Buyer doesn't know what's real and what isn't real. So for the people that it really bothers them. Although some people don't answer their phone for anyone that calls, which is probably more the camp that I would find myself in personally.
So why does this happen? Money.
Trying to make money.
Money. The credit agencies are looking to be profitable, so mortgage companies are willing to pay for these trigger leads. This is why this happens. Obviously, the credit companies are probably not very thrilled about the fact that this might stop, but it would be great for us.
Yeah, it really would. I wonder if it leads to increased costs of credit reports, which have already been pretty expensive. I mean, what were credit reports when we worked together 15 years ago? They were probably like $30. Now like $175.
I think the actual charge was 18
Yeah.
and we would charge 30, so we would sort of mitigate some of the losses on the
Well,
loans, but we
we
wouldn't.
would be paying for credit reports for people that don't ultimately close. Like
Yeah.
we can't charge people for credit reports until they actually close. So if 1 in 5 credit reports that we pull actually close, the other 4 are not. We're absorbing that cost. So we obviously add a little bit of money to compensate for that.
It's
But
a random sneaky good thing to bring up. Like we lose a lot of money on credit reports, actually, if you think about
thousands of
it.
dollars a month, I'm sure.
Yeah.
Or at least like high hundreds of dollars, at least in our office. I feel like I'm always running credit for people. I had a guy last week that I ran his credit scores were not where they needed to be. He was like, he's like, my credit's gone up in the past month, and I think it was like 29 days, and we're actually not even allowed to run credit until it's been past 30 days. So I waited till we get to the 30-day mark. I'm like, you sure your credit's gone up? Ran it. It did not go up.
Yeah.
So like, just like another hundred and whatever dollars of credit reports. And, again, I would be interested in what our percentage of actual closed loans are as a percentage of the credit reports we pull. It's probably 5% because I feel like I'm pulling people's credit all the time and they don't always translate to loans.
Something to bring up, these like Credit Karma type companies, Capital Ones. I don't know what their model is, how they think they can show consumers. If like a consumer gets on their app, makes a $50 payment, and then like 27 minutes later, they have something showing them that their credit scores went up 57 points because of it.
Mhm.
We actually need to talk about this. That does not happen.
Yeah.
I get in
Yeah.
so many conversations about this. So you have a credit card. It's a $500 balance. You need to adjust your score. You should probably be below $100. You make that payment. You need to wait for that creditor to send the information to the credit companies. So
Mhm.
that creditor, let's just use Capital One, they might send out their information on the 15th of the month. The credit agencies need it in a timely fashion between the 21st and the 25th of the month to update their credit score. So like in my random equation here, if you just make a payment on the 15th, the odds are it's probably not going to report 10 days later.
No, it's going to
So,
be 30 days later.
yeah, it's so annoying, these credit companies that make it seem like it's 5 seconds later. It is not.
That's a big misconception. People think that their credit report is accurate to the minute, and it's not. I'll
It's
tell
not.
someone they have a $400 balance on their Citi card, and they're like, "No, I paid that off last week." I'm like, "Yeah, dude, you probably did pay that off last week, but it's not like Citi card or Capital One reports that every 10 seconds, like you just said." So there's a little bit of confusion there, and honestly, the Credit Karma thing is. I feel like we've talked about this on the pod, but for any new people listening, it's Credit Karma is great for tracking trends in your credit score. Like you can follow what Credit Karma is saying to get a sense of if your score is increasing or decreasing or if something just like happened unexpectedly. But the score that Credit Karma or your Capital One card or your Discover card or something along those lines provides to you, it's just a different calculation than a mortgage lender like us gets. When we're pulling credit, it's a different model that's specific for the mortgage industry that weighs certain aspects of your credit profile differently to give a score that matters to mortgage lenders. Whatever Credit Karma is doing, they're using a different model that doesn't weigh things the same way. So you might see 750 with Credit Karma, but when I run it, it's 720. And it's just because of the different models. And again, that creates distrust with people. I mean, all the time, like all the time. Whenever someone thinks their credit score is what Credit Karma says, it's always lower. It's never the other way around. But that's why, and it's just part of the business.
And that's a scale thing too. 350 to 850 is a mortgage credit report. Your consumer reports are typically, is it 400 to 900, and even some of them are 1,000, like the insurance ones.
Yep.
So, can I quickly mention, you were just feeling it right there.
I love it
Like,
when you do this.
dude, backwards hat Randy, I don't know if I want that guy to come back. Like regular hat Randy feels it.
Hey, Beds, I'm going to let you have your fun. I'm saving a silver bullet for you at some point
Oh,
in this podcast, and I
oh
don't know when
god.
I'm going to let it out, but I just want to put that out there.
Oh god. Is it pickleball related?
Nope. It's
Oh
good,
god.
though.
Oh
It's
god.
good.
What did I do?
So,
Okay.
okay.
All right.
Anything else on trigger leads?
Trigger leads. Nope. Good.
Okay, cool. All right. Little thing to mention. Purchase demand is near 2-year highs,
Yeah.
which I don't know. I never know about this stuff and how they get that information. It certainly doesn't feel that way. It feels like demand's actually been pretty high, but I guess by whatever metric that they use,
Hmm.
that it's gone up a little bit as rates have slowly trickled down, and we're getting into the summertime. So the last time it was this high was I think the end of 2023 ish. So
Yep. Looking at it right now. Randy, is that just like a perception thing maybe? Buyers are thinking it's starting to swing back to a buyer's market?
I don't know. I think in my what do I know? Honestly, we're up here in Maine in a fairly small market, so it's not like my business is a real indication of what's going on across the country. I mean, these are countrywide numbers, but I bet you this time of year and the fact that rates have maybe slightly ticked down in the past few weeks leads to people just on a mass scale applying for more mortgages. So,
Yeah. Yep.
and refi applications have jumped 16% in the past week, which is always an interesting thing because it's not like we do a whole lot of refis, me and you, at this point. So,
And that's actually strictly, I think the refis that are coming through are debt consolidation scenarios. People are starting to stack up debt.
yeah, no, they absolutely are. So, that's one of those scenarios that it might make sense to refinance when you're sitting on a bunch of credit card bills paying 25% on them. Refinancing into a 6.875 mortgage rate could make sense in that case, even if you're sitting on a 3% mortgage on your money at that point.
Yep.
So, other big news for CMG. I don't know if we talked about this on the pod, but I think it was like a year ago. Well, shit, we've only been here for a year. So sometime in the past year, we found out that Chris George, who is the owner of CMG, whose initials is on the name of the company, he was in the process of buying a bank, which is big news for us. A lot of companies like us, independent mortgage lenders, we're non-bank residential lenders. We don't have a bank attached to us, and there's certain benefits that come with that, but there's certain things that we don't have access to because of that. So, anyways, Chris George was in the process of buying the bank, and I guess he just got. I think the Federal Reserve signs off on these things, and the way he positioned it to us last week was that they officially signed off last week on things, and it's a big paperwork-intensive process, but it's all signed off on, expected to close at some point in the fall, and then at that point we'll officially have what's called CMG Bank attached to us, which is going to open up a whole bunch of different things for us.
I wonder what it means, or what does it look like asset wise to be able to buy a bank?
I'm
I don't
sure
know.
it's not nothing.
I mean, I don't know what goes into that, but it's going to be nice. Portfolio options. We wouldn't have to, in certain cases, borrow money to
Mm-hmm.
turn around and lend it out. So if you look at that run right there, it makes money cheaper in certain cases. So I think organically that's going to bring down some rate scenarios for us, which will be nice.
Yeah, it should lead to some lower rates in certain aspects. It's certainly going to give us different programs on the jumbo side of things, which is nice. Right now, we have to work with a very limited number of jumbo investors, and sometimes their pricing is good, sometimes it's not. We're just kind of we're at the mercy of what they want to do. So once we have the CMG Bank aspect of things, I think we'll have access to more competitive jumbo pricing. That's always competitive, as opposed to just competitive here and there. One thing that I think was really interesting, he said in the call that we had last week, the day that we close, whenever that is, there's like 16 states that are around. I think the CMG might actually be based out of the Midwest someplace, Minnesota or Wisconsin or something like that. CMG Home Loans is based out of Northern California. But anyways, this bank that they're buying is in the Midwest. And like 16 states that this bank has a footprint in right away, anyone that's licensed in those states will be licensed in all the other states
Oh, yeah.
on a moment's notice, which is a very cool thing because a lot of people don't realize that the bank LOs are licensed in basically any state that bank does business in.
Yeah.
So if you're a Bank of America loan officer, like you could be licensed across the whole entire country. Where I'm licensed in Maine, New Hampshire, Mass, and Florida. Not that I would do a lot of business outside of those key states, but occasionally I'll get a lead out in South Carolina or New Jersey, and I just have to hand it off to someone. It'll be nice as CMG Bank expands that footprint, which it sounds like it's going to happen. At some point, I would expect us to have access to most states to lend in, which would be cool.
Yep. Secondary loans, jumbo. We're talking about jumbo
Yeah,
arms, portfolio scenarios. Those are all bank specialties. So it's going to be nice to have those options.
yeah, definitely. So that's the CMG Bank stuff. Exciting news. Stay tuned for more info on that. Wanted to go over a few products.
Let's hammer.
So, first one is, with that all being said about the jumbo loans we will have access to, there is a new jumbo loan program that we have. It's called Prestige Jumbo, and that allows us to basically go 10% down on a jumbo loan, up to $3 million. dollars. And that's for primary residences and second homes. And I guess the pricing is pretty competitive. So, typically, jumbo loans are going to be 20% down, but this 10% down option could be nice.
Yeah. Yeah, that's big actually. That's really big.
Yeah. So there's that. Anything you want to add on that, Beds?
It's nice to have this just basically just because of the pricing. Pricing everywhere is starting to increase, and it's like the more competitive we get, the less likely, we're going to lose scenarios to banks. So this is good news. Between our CMG Bank and Prestige now, it's nice to be in the game. And something that I really wish I could sell this better is the all-in-one loan to get
Yeah.
people to understand that on higher price points. But anyhow,
I think the all-in-one loan is actually going to be a big part of the CMG Bank stuff. They're going to try to make that into more things. So I didn't quite understand or get the details of what Chris George was talking about in the call, but all-in-one sounds like it's going to be a centerpiece for CMG Bank. So I'm sure we'll keep spreading the news on that. But the stuff with this jumbo loan stuff, it's just, how many people are going to need a 10% down jumbo loan up to $3 million? dollars? Like, it's a rare borrower, at least for me.
yeah.
But it is something that we can talk about with our referral partners and the people we do business with, and The thing I would want referral partners to know is that CMG has products for basically everything, and this is one we didn't have, and now we do. So
I actually can comment that I think it's amazing how many mortgage products we have. Like,
yeah,
dude, I get lost in all of them sometimes, not in a negative way, but more of like there's so many of them. We have a product help desk, you plug in a scenario, and these guys come back within a day with, you know, stuff that you'd never thought you would see as options.
definitely.
So it's nice to be here.
So let's talk non-QM then for a second. We've
Yeah.
talked about non-QM a bunch on the podcast, but I had a deal that I lost that went on to buy a condo in Agunquit, and it turned out the condo was attached to a restaurant, and that no longer became an option conventionally. Woman came back to me, and we can do the loan with a non-QM loan. So non-QM loans are unique. They're for that weird property or the weird borrower that we can make something happen with. So I know you want to talk a little bit about non-QM again. Did you have any thoughts about
Yeah.
it?
A recent closing was, I loved it. I loved dealing with this girl. She was like a Dexter type.
Serial killer?
Forensics. What's that?
A serial killer?
Yeah, she was a serial killer. We gave her a job, a loan, I mean. So the state that she was employed in, they switched it over to 1099 for her. So, I mean, she's always constantly traveling places, using her own money. So the 1099 benefit was better for her for write-off scenarios. So
Hmm.
she had been with them for 5 years, and she had like some side jobs too. It seemed like she was really good at this. So the state switched her over. She was 4 months from W-2 to 1099, which typically means you need 2 years of 1099 income to qualify a borrower. This non-QM platform, I mean, she had a great FICO score. So number one, when you have a great FICO score, you're proving your ability to repay. So if you're somebody with a less than FICO score, it's just not for you. You're not proving your ability to repay. She had a high FICO score. She had 20% down, which gets you in the door with non-QM loans. And man, we closed it, and it was a nice interest rate, slightly over 7.
Situation that most
Yeah.
people wouldn't be able to do. Like that's great.
Yeah, somebody got in a home. Non-QM didn't exist a couple years ago, and now this person's a home buyer. So I think, Randy, a little bit of doing the non-QM stuff is that we're not CMG to CMG type of lending here. We're using our broker platform to broker these loans with these non-QM lenders. So there's always this area of like, us LOs need to call that company. Here's what I've got. There's an account rep that sort of scrubs it for you and says it will probably fit in this product profile. Here's the pricing. So there's like for me, there's a lot of homework up front to make sure it quote unquote fits, but also I'm educating the consumer. Hey, look, here's how this is being lended. It's like a layer away from my control. Here's the option, buckle up, we're going to get it done, hopefully. But yeah, all of them have gone through.
Love it. Yeah, great
Yeah.
options.
Yeah.
And I think we'll continue to find use cases for them that we're unaware of as we encounter these weird situations. So, hey, can we talk about something else real quick?
Okay, is it silver bullet time?
I think it is.
All right, let's do it.
I just wanted to say that I saw a lovely photo shoot of you and Allie on social media
Oh my
today,
God.
holding hands. Cy Sear took some great pictures of you, friend of the podcast. I mean, you guys were looking lovely. Very happy. It was beautiful.
There's one photo. Now look, this is me picking on myself. I go through phases where I lose a lot of weight, I put some weight on. This is an area right now where I'm not proud of myself. I saw a photo with me fully stretched out, showing this love motion to my wife, and all I could look at is my physique right now, and I'm like, Chris, get it together, dude.
Hey, they were very nice pictures, Beds. I hope you got some of them framed. You and Allie looked very nice. You were holding hands. It was great. It was fantastic.
Listen, if we can we go a little further with this? I was looking at my wife pretending to lovingly look at me. Even when she was doing it when we were in the streets, I'm like, man, it's been forever since she's looked at me like that.
She's a good actress.
She's a great actress.
You should have had Cy sneak a couple new headshots in there while you had it.
Okay, I deserve this. See, and this is the attitude of non-backwards hat Randy right now. He's got an attitude with his frontwards hat. I don't.
I got a chip on my shoulder.
Yeah, you do. I love it
So I
though.
just want to get that out there. That was great.
All right, thank
So
you for that.
maybe I'll use that for the thumbnail of the podcast. So we'll see.
Yes, let's do it.
So okay, last thing I had to talk about was just RD main state housing. We've had the ability to do mobile homes and through a pilot program, and that's something that we hadn't previously been able to do, and it's just something that they kind of rolled out. It's not for new mobile homes, but it is something that an existing mobile home that fits all the normal criteria that we previously talked about, something we can do. So
I'll let you cook on this because I haven't been paying attention to it. So
yeah, no, I mean, RD is a loan that doesn't require a down payment, which is typically the type of loan people would want to do to buy a mobile home. And the options were a little bit more limited. Again, there was a pilot program that allowed for it, meaning select few people had access to it, but that's kind of rolled out to everybody now. So as always, the mobile home has to be on its own land, minimum 400 square feet. It
yeah,
has to be permanently affixed to a foundation, built within the past 20 years, stuff like that. That's pretty normal, but you were not able to do that before, and now you can. So
the non-move scenario you always have to pay attention to. I like the 20-year detail. Some of these mobile homes are pretty old.
yeah. Although I think I closed one last week. It was built in like 2018. It sold for like $415,000, I think, roughly.
What?
So dude, some of them are not. I mean, some of the newer ones are nice, and they cost a lot of money. So just don't sleep on the mobile homes because it's a great affordable option for a lot of people. And now this is just another loan type to use.
Why aren't we in the mobile home business, Randy?
Why aren't we in a lot of businesses?
Yeah, good question.
Anyone listening, if you have a business, let me and Beds know that we can start.
Yeah,
Great.
yeah. Just bring it to us.
Yeah, we'll talk about it.
We'll discuss it.
Anything else you want to talk about?
I don't know, man. I've got nothing. I'm still a little rattled now that you brought up the photo shoot.
That makes me happy.
No, I've got nothing. Actually, I think that was pretty good what we just covered
Yeah.
there.
Yeah, I mean, just like we do every month, just want to talk about stuff that's going on in our little mortgage world, some of the news, some things that are worth sharing to people. So, any of our referral partners or clients or past clients worth listening, keep us in mind if you need anything mortgage wise. We're happy to help any way we can.
Let's go. We will talk soon.
See you next month.